What's going on, everyone? Happy Friday. Hope everyone's having a good day. Hey, just right off the bat, I want to apologize to you guys for switching up the schedule this week. You guys know we started 1 hour earlier than usual. My wife and I, just because of her work schedule this week, it's a little bit funky because we have Formula One here in Vegas this weekend, these next few days. So it's made things a little bit funky for her. So she's getting off at like now, actually. Um, and then when she gets home, we're going to go to the gym. And so I just wanted to start this like an hour earlier to accommodate that. Because if we started at 5, that probably wouldn't put us there to like 6:30 or something like that when it's all said and done. Maybe even closer to 7. So hopefully that makes sense. But anyway, I'm happy to see you guys once again. Happy Friday. I hope everyone had a fantastic week. I'm sure it was a great week for a lot of you guys. Really killer week on the stock market. I want to show you guys my portfolio in just a little bit. As I'm sure you can imagine, we're sitting at all-time highs, and I'm sure a lot of you guys are as well. But before we get into that, welcome back to another Dividend Happy Hour. I think this is episode 118, which is crazy, guys. But yeah, guys, I'm stoked for tonight's live stream. We'll run it for an hour or so, maybe a little bit longer, depending on when my senorita gets home. But yeah, guys, why don't we kick this thing off the best way we know how, with a quick cheers. So grab whatever it is you're sipping on. I actually got myself a little cup of Joe here tonight, a little pre-workout, I suppose. So grab whatever it is you're sipping on, and cheers, guys. Here's to you. Thank you so much for tuning in with me, and thank you guys for showing up to an hour earlier. I really appreciate that. Although I still know, and this is what I'm apologizing for, really, I still know we're going to get some people come like 5 o'clock who are just now tuning in and didn't get the memo. So I sincerely apologize for that. But yeah, cheers, guys. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because that's really what's bringing us together tonight. But anyway, cheers. All right. And let me know a few things here in the chat, my friends. Number one, I want to know, which stocks did you buy this week? What did you add to your portfolio? What are you buying? What's looking good out there? There's quite a few stocks out there right now. I mean, we got some Johnson & Johnson, the Hershey Company, Nike's looking pretty good. So there's a handful of good looking buys out there right now. So I'm curious to see what you guys stacked up on. So let me know that. Number two, I want to know, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Let me know that. Number three, aside from, well, yeah, let's hear about it too. Why not? Let me know if anything cool happened in your guys' portfolio this week. I'm sure there's going to be a lot of all-time highs. Share them. Share everything cool that happened to you guys this week in the chat here. And also number four, I want to know, do we have any first-timers here in the Dividend Happy Hour? First-timers to the live stream. If this is your first time, welcome aboard. So stoked to have you here in the stream. Excuse me. Sorry, guys. Typically, we do this every Friday night, and usually it starts an hour later than today. Usually it starts at 5 p.m. Pacific time, 8 p.m. Eastern time. But I called an audible today. But yeah, if this is your first time, I'm stoked to have you here. It's a lot of fun. We do this every week. It's fun just to, kick it in and hang out with you guys. So it's one of my highlights, one of the highlights of my week for sure. So, but with that, let me scroll up to the chat, see who we got here in the building. Let's see. It looks like there's 90 of us here in the live stream. And real quick, guys, 90 people. If you have the capacity to, just hit the thumbs up button on that stream one time if you're stoked and ready for a good time tonight. Show some love to the Dividend Happy Hour. So scrolling all the way up, I see Chris, I see Alan, I see Loft, Chuck. Oh yeah, I forgot about Target too. Let's see. Rashawn's here. What's up, Rashawn? Pat is here. What's going on, Pat? Albert, Pat as well. Couple Pats. We got Pat T and Pat S. Cole's here. What's up, Cole? Antonio's here. What is going on? Uh-oh, the Lean Mean Dean machine. I see ya. What's going on, my friend? Salvatore's here. Always here to support. I love it. Thank you. Alex is here from the Midwest. What's going on, Alex? We have NA, who loves F1. Tell you what, it makes driving on the strip a pain in the butt. Chaparro's here. What's going on, my friend? Mr. J. Big Bad Kevin Burgess. What's going on, Kevin? Hope you're doing well. Who else we got? Coyote Sunglasses is here. What is happening? Yeah, Pat says SCHD almost at 30. Yeah. We'll see. We'll see if it gets there. Oh, I'm sure it will, actually. I mean, it's at some point for sure. It's what is it, 29.35 at the close of the market. So yeah, 65 cents. It'll get there. Thieve is here, Tony's here. Who else we got? Jeremy. Nice. Journeyman, what is going on? I feel like it's been a while. Happy to see you. Real Madrid, what's happening? Adam, what's going on, Adam? Jeff's here too. We got the DGI Crab in the building. What is going on, my friend? Connor's here. First time tuning in. What's up, Connor? Happy to see you live. Who else we got? Chevy, Mitchell, Vadim, Lance. Shout out, Lance. What's going on? Richard's here. What's up, Richard? We got Mila. Cool. Everyone's here. I mean, guys, new people popping in left and right. Megas, Coach Tim, Unboxing is here. Yeah, I think I'm caught up now. Vacation time. What's going on? Cool. The gang is all here. Cool. I'm stoked to have all you guys here. Thank you so much for tuning in. So let's go through some of these comments real quick and see what you guys are buying, seeing what you're sipping on here. Yeah, pharma stocks are juicy. Ooh, Antonio, my man. Oreos and milk. Jeez. My wife made chocolate chip cookies earlier this week, and I'm not really a big sweets guy, but I am powerless before chocolate chip cookies, especially her chocolate chip cookies. They are seriously like the best cookies I've ever had. So I went on a little jog this morning, and to refuel afterwards, I downed a couple of chocolate chip cookies. Let's see, where can we go here? Jeremy crossed 23K in the taxable. Nice. On your 1-year anniversary of investing, my friend. Good job. Good job. Rashawn's been picking up some SCHD. Yeah, I mean, you can't go wrong just dollar cost averaging that every week, right? What else we got? Alan picked up some SCHD. Cole says he's waiting to buy a few stocks in the next few weeks. Which ones? Which ones are you waiting on? Let us know. Let's see. Yeah, Real Madrid picked up some SCHD and DGRL, while some Google, 9 shares of Google. Nice, good stuff. Let's see here. Yeah, Antonio with some Realty Income. Yeah, Realty Income's looking pretty good. I think it's kind of getting back up there now. It's about 57-ish. And a nice payment from EPD. Yeah, I think you and I must have pretty similar EPD positions, because I think mine was about mid-50s as well. Let's see. Man, Chris with all these, the usual buys. VU, SCHD, Walmart, J&J, Realty Income, Google, and NVIDIA. Nice. Looks like Adam picked up some Ford. Nice stuff. Salvatore with a few pickups here. Realty Income, Google, Amazon, and Pfizer. Nice. There we go. Yeah, Jeff picked up some Target. 10 more shares in that massive wood shedding it took. Added to my position. Nice. And drinking some Bacardi to celebrate. Cool. There you go. Colby here says, can't get away from buying the Hershey Company and Nike. Also added Pepsi and Archer Daniels Midland. Nice. Guys, check out Colby's channel here, the DGI Crab, when you have a moment. He's putting out some good stuff. And also, Colby just recently did a video with Ari Gutman over on Ari's channel a couple weeks back now. Masters of the Market, really good conversation, and I'd encourage you guys to watch that as well. Albert, this is a really cool milestone. Reached 600 shares of SCHD. Good job. That's awesome, man. Good for you. Let's keep going. Lean Mean Dean Machine with the Miller Lite. Picked up a few different companies here. LYB. HVT, is that Haverty? Is that what that is? HVT, Haverty Furniture? Yeah, it is. Okay, nice. Jeremy picked up some Realty Income and drinking some coffee as well. Nice. There we go. Let's see. Chaparro with some JEPQ. Ooh, Chevy. This sounds delicious. Sipping on some Casamigos. Classy. Mixed with Mango Tropicana and Guava X XXL wine. Nice. That sounds good. Let's see. Mitchell with some bourbon. There you go. Yeah, Patrick says, "What are your thoughts on ELV?" Got some more Hershey, and I've seen ELV went through a pretty big drop. I just put out a short mentioning them. Pretty solid dividend growth stock. I don't really have too much thoughts on it beyond that because, and I'm not really going to have the best insight on insurance companies beyond just very surface level stuff like that because I really just don't understand. I really don't understand them. So I can't tell you what makes UNH better than ELV, and vice versa or vice versa. I'm just not quite there yet. I don't know, Salvatore. This is a good question, but I don't know why I would buy Tesla just to have it. It doesn't really seem like something I'd be too interested in partaking in. Nothing necessarily against is Tesla, but I would never buy something just to have it, I guess. You know what I mean? Mitchell, wow, great job. 1,300 shares of SCHD. That's crazy. That is crazy. Richard usually is sleeping, but cool. Glad we got to have you in the stream at least for a little bit. Oh, this is cool. Mila says, "I love you." Thank you. From the UK, me and Ari, you've been following us for the last 6 months or so and find us both inspiring. That I really appreciate that. Thank you for the kind words, and thank you for and I'll thank you on Ari's behalf too. Thank you for all of the support on both of our channels. I know for me it means a lot, for him it does as well. And hopefully you guys too, if you've been tuning into the videos that me and Ari have been doing together these last few weeks, I hope you've been enjoying them. We're making that just a weekly thing. And they've been a lot of fun to do. Ari is he's just a really cool guy, really nice guy. I think we're on the same wavelength with a lot of things. We're around the same age. So, and he's just an easy guy to talk to. So I feel like we click really well, and hopefully that comes out in these conversations. But it's been a lot of fun being able to do that. Oh man, Real Madrid. That's crazy too. 2,750 shares of SCHD. Wow. Wowee. Okay, so this is actually a pretty good question. What do you think about adding JEPI or DGRO with SCHD? I think it depends. I personally have kind of sworn off covered call ETFs, and if you want to hear some more discussion on that, speaking of the chatting with Ari, we talked about it in depth in the most recent video we did together on his channel. So check that out. But I think as far as covered call ETFs go, JEPI is probably one of the better ones. JEPI and JEPQ, I really don't have too many qualms with. During the time that I owned JEPI, I owned it for maybe a little over a year, it was good to me. JEPQ has actually done pretty stinking well too since its inception. So I don't really have much bad to say about them, but personally speaking, I've kind of sworn off of them. But I think if you're going to add a covered call ETF, something like a JEPI or a JEPQ is much better than a lot of the other covered call ETFs out there. Especially, don't even get me started on the they who must not be named, the ones that start with the Y. We won't even get in that conversation. Watch though, someone's going to knock on wood. Someone's going to ask about it later in the stream. So, oh my gosh. Look at this, guys. Oh my goodness. Past $300,000 in total returns year to date. Again, Kevin, man, holy cow. That's crazy. I can't even imagine. And the cool thing, guys, about investing, like this is very inspiring to see. And thanks for sharing that, Kevin. And also just generally thank you for putting yourself out there and sharing your portfolio, because it is very motivating and it's very inspiring. And what I was going to say is that's the cool thing about investing, is getting to that point where if you just stay consistent and stay disciplined and just keep contributing and keep investing throughout the years, getting to this point where you're generating hundreds of thousands of dollars in year-to-date returns is totally possible, and it's cool to know that just by keeping at it it's going to take a long time to get there for sure, but eventually you will get there. And I think that's a really cool thing. So good job, Kevin. Congrats, man. That's huge. Really, really cool. Let's see. Let's keep going. Nice, Lance. Been watching your videos and started my investing journey. Nice. Good job. Great job getting started with investing. Bought some SWK Stanley Black and Decker this week. Nice. Looks like we have a little super chat here. Thanks for your existence. Hey, my pleasure, my friend. Back at you. Thank you for yours as well. And thank you for the super chat there. That's super nice. Really appreciate that. Let's see. Let's keep going. Missed some comments here. There we go. Nice. Kevin, no, not Kevin. Chris here says, Walmart just hit over 90 today. 90? 90K? Walmart just hit over $90 per share. I'm a few thousand from hitting six figures in that position. Dang, that's crazy. Just in that one position. Unreal. Ryan says, third time in a row. Live. Glad to be here. Glad to have you, my friend. Thanks for tuning in. Uh-oh, Sir Dude Bro Man is in the house. What's going on? You know who I don't see? I don't see Shamizzle. Where's Shamir? He might be working or something. Maybe we'll see him in a little bit. Shamir, if you're watching, we miss you, man. Okay, let's keep going. Salvatore, this is cool. Good job. Finally passed the 50K mark in portfolio. Good job. Halfway to that six figures. Edgar, same thing. Hit 20K. Good job, my friend. 20% of the way there. Keep it up. Let's see. So this is a good question. Nehemiah, I think I'm just going to answer this last question here. What is your number where you think you could stop working? It's a really tough question to answer. And this probably will be, it's something that will probably change over time. But in my mind right now, and I just wrote about this in one of my recent newsletters. No, I actually just talked about it in my last video that I put out Wednesday, in that Q&A video. I went through this, but I'll quickly touch on it again here. So at this point in time, kind of where my mind's at is, I'm going to rephrase the question a little bit and rephrase it to like, when is your number where you think you could start pulling some dividends? And for me, in my mind right now, I'd like to maybe start using some of my dividends to pay bills, maybe around the time that I'm averaging about $2,000 per month. So bringing in, 24 grand per year. And from this point, it might take me another 15 or 16 years to get there, just based on the rate that I'm currently contributing and based on what I hope are like conservative growth estimates. And so kind of my mindset right now is, once I hit that point, maybe I'll start taking like half of those monthly dividends and use that to start paying some of the bills, maybe put it towards a bit of the mortgage or some other stuff, and then just continue reinvesting the other half. I could change my mind, like I said, down the road. We'll see what happens, but that's kind of how I'm thinking about things right now. And when it comes to like not working, this is my full-time job, making videos, writing my newsletter, everything that pretty much all my investing gibberish that goes out. I'm fortunate enough to be able to do this for my job full time. And I love this. Like, I never plan on not doing this. And I hope that it just continues evolving from here. And so with that said, I don't ever plan to stop working. And I think so, once I was able to go full time with this, which I've been at it for a couple of years now, which is just crazy to think about. But I think once I was able to transition into doing this full time, it I didn't feel as much of a rush. I didn't feel like I was in as much of a rush to um, get to a point where like all of my bills are being paid from dividends. Prior to that, when I was still working, I couldn't stand my job. Like I was like, you these dividends need to stack up a lot faster because I need financial freedom fast. But truth be told, like part of me, and this is a lot of hard work, don't get me wrong, but doing what I do and being able to love what I do, part of me already feels like I'm kind of retired, like I'm there, like I'm where I would want to be if I was still working, you know? And if I were to work a 9 to 5 and eventually retire from that, like I could see myself filling my time in retirement doing something like this. So, you know, I feel like the hard part's kind of behind me. And so, like long story short, don't ever plan to stop working. I'm hoping, as long as you guys will have me, that is, I'm hoping to be able to do this in some capacity, like for the rest of my life. And I figure things like talking into a camera and writing, I figure those are things that I could, you know, do well into my old age. And I'm hoping I've got another good 150 years left in me. We'll see what happens. So, a really good question, though. Thank you for asking. Unboxing NAMs. No, I don't invest in Bitcoin. Not there. Not into it. Okay, let's see. DGI Crab, any thoughts on why Hormel is having such a bad year? Um, you know, I recently, I think it's been a couple or a few months, but I touched on Hormel in, I think I did at least. I touched on Hormel in one of my videos. And I thought I talked about why the share price was going down, and it's been a while, so now I don't quite remember what the specifics were there. But let's take a look at it over on Snapstock. Just take a look at what the share price has been doing, what the financials have been up to, and see if we can figure out what's going on. Um, so I mean, if this is, let me cross-reference this with Seeking Alpha. Okay, so yeah, they're pretty in line here. So you know, it's not really been too bad. It's not up like the rest of the market, but it's not seeing a super crazy drop. But let's see. Let's keep going. Free cash flow yield's getting pretty high. That's nice. And so you're asking if the Dividend King is going to end their streak. You know, I don't know. It looks like the earnings per share has been trending down since 2018 for a few years, but the free cash flow has actually gone in the other direction. Free cash flow per share has gone up. So that's a promising sign. This not so much. Seeing these margins go down like this, that is a bit of a red flag, and we're seeing it in both the gross margin and the net income margin, and we're seeing some decline here in the free cash flow margin as well. So I would say that's a bit concerning, but based on the net debt to free cash flow, this doesn't seem too crazy. So at least that's good. Interest coverage has gone down, but it's still, you know, 14.6, which means that for every dollar of interest they have to pay, they've got $14.61 to cover that. But yeah, this is kind of an interesting trend, right? Now moving on to the dividend stats, they have been a pretty nice dividend growth stock. As the years have gone on, that dividend growth has really, really, really slowed down though. And simultaneously, as the dividend growth has slowed down, the earnings per share has really gone up very consistently. And you know, I would say that this is a pretty big red flag. The earnings per share, the payout ratios have gone up quite a substantial amount. It's not even just a little bit. You know, since in 2018 it was below 40%. Now it's basically double that. It's more than double that actually. So yeah, I would be a bit concerned by this if I was a Hormel shareholder. That's not great. And while all that's going on, the returns have gone down. So the money that the company is putting to work and reinvesting into the business is not delivering as high of a returns as it used to. So yeah, I'd say that there's some pretty serious red flags here with Hormel. The dividend still looks to be covered now, but yeah, if those payout ratio trends continue, then that really doesn't bode well for the dividend. So I would be concerned for sure. And I think we got another super chat here, guys. Let me jump back over here. And real quick before we take a look at that super chat, Snapstock, guys, if you want to check that out, you can get access to Snapstock by becoming a member of the investment club. There's a link to that in the description. Definitely check that out. I'd love to have you guys aboard. This one's from Rashawn, who wants to know, and thank you for the super chat, Rashawn. Opinion on realty income. I've continued to buy, seems bearish. Well, yeah, the share price has definitely come down. So yeah, I still have a pretty high opinion on realty income. It is a beacon of stability in my portfolio. And I think that's more than anything, that's the role it plays. It's going to, I think realty income is going to continue to deliver consistent and growing dividends throughout the years. And, you know, if I wasn't buying clear secure, I would consider adding to realty income at this point because it's really not too terrible of a price. It's still a little bit above my cost basis, but nothing too crazy. And yeah, it's one I'm kind of watching. It's kind of jumped up a little bit. Like I think the lowest we've seen it recently is 54, 55-ish. I could be a little off on this. I think now it's around 57. So it's kind of starting to get up there. But if it goes down, if it continues going down, and recently it was in the mid 60s, so it's still, you know, generally trending down. And if that keeps going up or keeps happening, excuse me, I would certainly consider adding more to my position. But yeah, it's kind of just working on other things for now. So okay. I think I skipped a lot of comments here. Let me find my place. And thank you, Rashawn, again for the super chat. I appreciate that. And I think I'm a little bit behind. I'm a little bit behind here in the chat, so I apologize, guys. Let me catch up. Where am I? Where was I? Okay. Oh, Edgar, quickly thoughts on Cintas. I'm actually going to star that because that's a great looking company. We'll go through the financials. I really like Cintas. And truth be told, glad I see a few comments here. Glad One Main Holdings, Ally Financial. I don't have any serious thoughts on them, to be honest with you guys. I really don't. Okay. Andrew, what's going on? I see you. No worries about, no need to apologize for jumping in late. It was my fault. I called an audible kind of last minute, so I apologize. And I'm happy you made it. Nice. And Isaac, this is really cool. Hit $200 a month in dividends. Excited for the milestone. And so, guys, I'm just going through this chat real quick, just catching up on some of these comments, seeing what I missed. Yeah, some of you guys jumping in just now. I'm sorry. I'm sorry for starting the stream early. I started an hour early, so let's see. My wife and I was explaining this at the start of the stream, but my wife and I were going to. She's should be off work now. She texted me. Yeah, she should be on her way home now. When she gets home, we're gonna go to the gym. And if I started the stream at our normal time at 5, it would just put us there pretty late. So we wanted to get an earlier jump on it. So, and I hope you guys don't mind. Sorry about that. Ex-Dividend Dad, what's going on, man? What is going on? Drew, what's happening? Yeah, Edwin, this is a good question. Do you have any positions in small cap dividend stocks? No, I don't have any small caps. I think the closest one that I have is, or the stock with the smallest market cap is going to be Clear Secure. And right now their market cap is 3.6 billion. And I think Williams Sonoma is in second place. Williams Sonoma's, well, 21 billion. Actually, maybe Blue Owl Capital Corporation is smaller. Yeah, Blue Owl's not small cap, but this would be mid cap. But Blue Owl's got about a $6 billion market cap. So Clear Secure is going to be the smallest market cap in the portfolio. Yeah, Williams Sonoma run up for sure. Looking good. I just went through their earnings. I just went through their earnings earlier today, and I mean, sales were down about 2% year over year. Nothing too crazy, but it looks like their margins improved. Some of the comps within their brands actually went up. So there's a lot of good happening with Williams Sonoma. I'm still very, very happy with that company. Um, and definitely have been fortunate with the returns from it so far. And real quick, if you guys want to check out my notes from the earnings call, I publish all of those for the investment club. So once again, there's a link to that in the description. If you go to my website too, just retirewithryan.com, on the homepage, if you scroll down, you'll see where I've posted all of the different earnings call notes that I have. Williams Sonoma, Visa, Clear Secure, Rollins, all of them I'm posting on my website for the investment club. So you guys get access to all that. Let's see. Let's keep going though. Let's see. Yeah. Okay. This is cool, Andrew. Yeah, I want to put it back on you guys too. So I got a question earlier for those of you who are just kind of now tuning in. Someone asked me like, at what point would you stop working, basically, and what point would you reach financial freedom? And this is Andrew's answer: $600 per week or $2,400 monthly. That's kind of about what I was saying too. But yeah, I want to put it back on you guys. Like, what would your number be? Yeah, I'm curious to know. So where are you guys at with that? At what point will you, at least today, because it could change over time, right? But in your minds right now, at what point would you stop working? Or as an kind of a different way to answer that question, if you want, at what point would you start pulling some of your dividends? So let me know that. I'm curious to know what your guys' number would be. So yeah, Pat says, if you love what you do, you will never work a day. I'll tell you what, like, there's some days where this is definitely work. It's definitely work scripting and shooting and editing. It's hard work and it takes a lot of thought, and it can be tiresome, just mentally tiresome. And I'm not complaining at all, because I absolutely love it. And there's so many worse things I could be doing, but there are some days where it feels like work. It's definitely a job. But, like I said, I'm so grateful to be able to do this. And I wouldn't trade it for anything in the world. It's been such a huge blessing. So, let's see. Isaac says, this is a good question. Do you happen to use an HSA? I do not. No HSA, but I've kind of been thinking about maybe starting one. And I'm also, something else that I'm kind of thinking of too is, and I got this idea recently from Wayne Nichols. We were having lunch maybe a few weeks back. I'm kind of thinking about starting a living trust. Let me know if any of you guys have that or have any info on that or experience with it. I'd be curious to know your guys' thoughts. I'm just now kind of like starting to learn more about them and maybe what they're for and what it entails. So let me know if you guys have any insight on that. I'd be curious to get your opinions and get your insight there. Let's see. Trevon says, can you look at TPL? Yeah, we'll take a look at that. I don't recognize the ticker symbol, but we'll give it a look here in just a couple minutes. I'm getting caught up in the chat. Let me keep scrolling. Oh, Friendly Dick, can of worms here. What watch are you wearing right now? So this is my, this is Old Faithful. This is my Seiko Solar Dive watch. Right here, show you this. The model number is, it's the Seiko SNE 573, 38.5 or 39 millimeter case. So from, diameters 30, 38, 39 millimeters. And I just have it on this NATO strap that I got from Amazon. It came with a rubber strap, but I thought this was cooler. So I am, and this is like my gym watch or my running watch. It's kind of my beater watch. I just wear it for, I pretty much wear it for everything. I love this watch. And check this out too. This is the best part. You hear that? Very clicky bezel. Okay. Okay, let's keep going. Let's keep going. This is a good question from Chevy. Do you have a dream car? No, not really. I actually, I'm really not a big car guy. And at the moment, I don't even have a car. My wife and I share a car, and which has been awesome. In my life, I've only had Volkswagen Jettas ever since I was 16. That's been the only car I've had. And I've had like 3 different Jettas in my life. And the last one I had, it was 2020, and I had like I was leasing it I leased it brand new, and the lease was up last year, like last April. So April 2023. So for the last year and a half now, haven't had a car, and I'll tell you guys what, haven't missed it. Haven't even thought about it once. It's never been an issue. You know, I work from home, and so it makes it pretty easy. And so when my wife and I, like pretty much anywhere I go outside of the house, 95% of the time I'm going with my wife. So we just really haven't had a need for a second car, which has been great. It's saved hundreds of dollars per month. And so I'm going to keep that going, or we're going to keep that going, I think, as long as we can. There will probably come a day where we'll have to get a, get a car, but as long as we can, we'll hold off on it. It's been awesome. So it's definitely helped me like invest more into the portfolio. So let's see. This is another really good question too. Great places to eat in Vegas. I'll quickly answer this and get caught up here so we can get through some of these stocks that you guys want to look at. Favorite Mexican place is Juan's Flamin' Fajitas. It's off strip, totally out of the way, but really love it. Recently went to this really good Italian place, also off strip, called Casa di Amore. Really, really good and fun. Cool place. What's crazy too, and this is so Vegas, attached to it, same business basically. Attached to it, they have a tiki bar. So it's like inside the restaurant is Italian. You walk out on their patio, it's a tiki bar. It's crazy. But yeah, there's tons of good places to eat in Vegas. If you want some on-strip places, another good Italian place is Carmine's, which is in the Forum Shops at Caesars. Family style Italian, not too pricey. It's pretty reasonable. So I'd recommend that. What else? Mayfair Supper Club on the Strip. That's at the Bellagio. Really fun. It's like a show and dinner all in one. It's pricey, but it's a cool experience. There's so many. Peppermill, iconic spot. Love the Peppermill. Oh, Happy Camper at the at Fashion Show Mall, too. Really good. Definitely recommend that. Those are just a few that that came to mind. So let's see. Let's keep going. This is a good question from Adam, and actually Chris asked me this earlier today on Instagram, which, by the way, guys, if you're not following me on Instagram, please do so. I'm posting some stuff over there. I'm pretty active on my stories. My Instagram handle is just Retire with Ryan. Definitely shoot me a follow. I'd love to have you guys there. And yeah, but Chris asked me that over there. I put out a story kind of addressing it. And I don't know. I always find these DOJ like their involvement in these companies to be interesting, whether it's Visa or Google in this case. I don't quite know what to make of it. And if I'm correct, I haven't really studied up on what's going on with this. But if it's what I'm thinking, it has to do with Google Chrome, right? And actually, let me know that in the chat if that's spot on. But that's what I remember reading about. And if that's the case, I don't know. I think that's a little interesting that they would want them to Google Anthropic. Is this it? No. It's this right here, I think, is what you're talking about, right? They want Google to split off the Chrome browser. I don't know. I think that's kind of a random thing. they wanted them to split it off because, and actually, sorry, I've came back over here too soon. Let's look into this. I think it has to do with monopolistic practices. That's usually what it is, right? Yeah. Who is the partnership between Google and Anthropic? Ruled Google was a monopolist, and I don't even know what Anthropic is. Oh, makes Claude AI chatbot. Got it. Russ uses Claude, and he really likes it. Yeah, so I mean, asking them to split off Chrome is interesting to me for monopolistic reasons. Because I feel like there's so many. I mean, Chrome does have a lot of the web browser market for sure. I don't remember the percentage, but it's a majority of people who use the internet use Chrome. But there's a lot of other browsers out there: Safari, Internet Explorer, Firefox. Those are just a few other ones. And so I think it's kind of interesting that I don't know. It's interesting, and I'm just going to leave it at that. I don't quite know what to make of it beyond that. But I feel like we are seeing these interventions happen pretty frequently. They're trying to. They were doing that with Visa too recently for similar reasons, just monopolistic practices. So I don't know. I don't quite know what to make of it. Now, do I think it's going to be the end of the world for Google or for Visa? Probably not. Okay, so let me see. We're at the part now where you guys are talking about your numbers. I'm just going to go through these quickly. 12K a month, 10K, 30K per year. That's good with your pension. Chris needs between 5 to 10K monthly. Yeah. $2,500 per week, so about 10K per month. Yeah, 10K per year for Jeremy. Okay. Okay. Place their farm in a living trust for tax purposes. I then bought it from the trust. Yeah, okay. Let's see. When are you going to do a watch collection video? Probably not too soon. I don't think people would be too into that. But I posted, follow me on Instagram, because last week I showed my entire watch collection. I did a little video series, not video series, but I did a little video over there. So check that out. Or check me out on Instagram. Nice. 2014 Jetta. Yeah, I love Jettas. My first one was a 2003. My second one was a 2006. And then I drove that one into the ground, and then got leased the 2020, and that was it. Okay, yeah, Carmine's is overkill. Yeah, it's a lot. It's a lot. Okay. I see a question about moving to Vegas. I'll save that one and circle back to it. Yeah, restaurants at the Wynn. Adam says Adam's a Vegas local too, so he knows. Another good one at the Wynn is, oh my goodness, it's gonna bug Electra's Wynn. Really good. Starts with an A. No, it doesn't. Starts with a D. No, yeah, it does start with an A, I think. Maybe I'm thinking of Delilah. Yeah, it's Delilah. That's really good food too, but it's also kind of pricey. Okay, guys, so let's go over to some of these starred comments here. So let me do this. Okay, so we're gonna go back to Edgar's question here and start with Cintas. Okay, and the ticker symbol there is CTAS, and this is a really solid company. If we just take a look at the financials, I think you guys are really going to like what we see here. And just a little overview on what this company does. We can click this right here. They make corporate uniforms and other business services. I bet you guys have probably seen their trucks driving around. But check this out. So company rents and services uniforms and other garments flame-resistant clothing, mats, mops, shop towels, and other stuff as well. Okay, so if we go back, it's had a really killer year. Holy cow. Up 61%. The valuation's a bit eh. And we're working on fixing these guys. They're not supposed to be in percentages. This section has been acting up lately for some reason. But the free cash flow yield's a bit low. Earnings yield's a bit low too. Really high PE ratios and price to free cash flows. But if we scroll down, I mean, it's certainly a growthy company, right? Like looking at these growth metrics, really solid revenue growth. The 10 years actually faster than the 5-year. Same is true with the earnings per share, which 10 years like 17.5%. And look at that free cash flow growth. That's a work of art right there. That is just top, pure class right there. Margins are improving or going up over time. Great to see. Really good to see. Debt's going down. Okay. And the net debt to free cash flow is about 2. Not bad at all. The dividends per share, this is a bit all over the place, but if I remember correctly, Cintas pays special dividends. And let me see if it'll have some more insight on that over here. I could be wrong about that, but I thought I remember them paying some specials here. Maybe not. No. Oh, yeah. No. I guess this is regular. Huh. Why is it? I don't know why the charts. I don't know why this chart is showing it so weird, but dividend growth has been pretty nice. Okay. And that's tripping. So looking at this, these stats are way better. Okay. 18% 5-year CAGR, 3-year streak, according to this, which is weird because like the history, maybe it was from 2020. Yeah. A little reduction in 2020 here. Payout ratios though. What are we looking at there? Man, this is weird. Why is it showing oh, that's the free cash flow. Okay. Earnings payout ratio is not too bad. Free cash flow payout ratio is a different story. That can be a bit high at times. So that would be something to look into. Really nice returns though. So I think there's definitely some good here with Cintas. And it's one that I have. I have this one on my watch list. It's not on my very interested list, but it's on my somewhat interested list. So maybe at some point I'll dive into it a little bit more. But, I think when you think about just what it does, corporate uniforms and stuff like that, pretty boring business, stuff that's probably always going to be needed. So I do like that component to it for sure. But now, guys, let's jump over to Trevon's comment here about TPL. And I don't think I've ever heard of TPL. So this will be interesting. Let's see what this company is. So going back over here, TPL. Oh yeah, I have heard of this one. And we talked about this one last week or a couple weeks ago. And I have looked at this stock on and off for the last couple of years. And basically this company just owns a ton of land out in Texas, and they generate royalties from allowing oil and gas companies to use their land. So, and this company is a cash cow. They're just making a ton of money. Really solid revenue, earnings, and free cash flow growth. Really crazy margins too. Like we're talking Visa level margins here. So I think that's pretty insane. The share price has just, oh my gosh, crazy. What's the 5-year? Look at that. And there's no debt from what I remember. Yeah. I mean, the financials just look perfect. Which makes you think like, it's almost too good to be true. So what's going on with this company? What could be the risk, or what could be the downside here? And I don't know. From what I remember, look at this dividend raise to 37%. I don't know. I thought there was some sort of big lawsuit going on with this company. Some really big litigation happening that involved its shareholders. I could be wrong about that, but I thought I remember reading something about that. But this company has been pretty crazy to see. So yeah, I don't know if you guys have any more insight on this one. Let me know. Let me know. Okay. And I've got one more comment start here. I'm just looking here in the chat. Okay, one day at a time asking about, am I from Vegas? No, I moved to Vegas September 2022. So I've only been here a couple of years. Moved from Sacramento. So I'm originally from Northern California. And there's a few reasons why we moved out here. Really just didn't like the Sacramento area anymore. My wife and I, we didn't see ourselves wanting to stay there and establish roots there. And we would visit Vegas like 4 or 5 times a year. Usually we would come here quite often. And which is funny because like we're not huge partiers. We don't really go clubbing or anything like that. So I don't know. It's kind of funny that we had such an affinity for this place, but we did. And it was one of those things to where like when we'd go home, like we'd be on the flight back home and we'd already be missing Vegas. And so when thinking about moving somewhere else, this seemed like a really obvious choice. And the cost of living and taxes were certainly a consideration. And so I would say that was a driver to move here as well. So it was primarily those couple of things. And I've got to say, it's been one of the best decisions we've made. I absolutely love living here, and I wish we would have done it years ago. So anyway, oh, Thief said you're from Paradise. Cool. So do you know Yuba City? Let me know if you're familiar with Yuba City. You should be if you're from Paradise. And then in the meantime, have you considered RTO? Yeah, which is Rent to Kill. That's a competitor to Rollins, another pest control company. I have considered them, but I like Rollins financials better. I think my wife's home. No, maybe not. Someone else. I like Rollins financials better, but RTO's got the better valuation for sure. But yeah, I have looked into it because I like the I like the pest control business. It's recurring. People have their pest control companies come out quarterly usually, so they have nice recurring revenue from that. There's always going to be ants and spiders and snakes and termites and things like that that get into places where they shouldn't. So that type of business is always going to be in demand. Excuse me. And so I like the business in general, but I'm holding out for Rollins. So Peanut's getting drunk in the kitchen. Yeah. Let's see. Brain Dead, what's going on? Thank you for checking out those conversations with Ari. That's awesome. Be still. You want to see the current watch list? Absolutely. So I've got 2 different watch lists. I've got my somewhat interested list, which are companies that, are kind of intriguing to me. I would consider them to be like in my circle of competence. At a quick glance, the financials look pretty good. And so they're ones that I'd like to keep a closer eye on. And this is what that list is looking like here. There's 1, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 14 of them. And the last edition is this company right here, Evolution, which one of you guys in the live stream a couple weeks ago brought this to my attention. I hadn't looked at this stock. I hadn't really heard of this company, but definitely familiar with what they do. They make slot machines basically and gambling equipment and stuff like that. So definitely familiar with that stuff, which is a good tie into John's question here. Do you do much gambling in the casinos? No. Every once in a while, maybe I'll do a little like video poker or play a couple of hands of blackjack. That I would say blackjack's my game, but I shouldn't not video poker. I meant blackjack. But that's about it. I'm not a big gambler. I'll lose like I'll lose like 20 bucks and it ruins it for me. But this is going back to my watch list. This is my other list. This is my very interested list. So this one's a little bit deeper in the funnel. These are the ones that I'm pretty certain, you know, I'm going to want to buy at some point. Rollins is 100%. This is getting added to the portfolio at some point. Zoetis, I've become very interested in this company. Old Dominion as well. I think this is a great business. So yeah, and so those are my two watch lists there. Somewhat interested, very interested. These stocks I'm watching a bit closer, and when the time is right, I probably will strike. I've had probably a couple opportunities to buy Zoetis, but instead I've been buying other things. Like I abruptly started a position in Clear Secure, which I still feel good about. So yeah, those are my two watch lists right there. Shannon, good question. When considering what company to invest in, do you normally pick best in class? Yeah, I would say that I try. I would say that I try to, for sure. And I guess that's kind of like a subjective categorization, right? Like, how do you? Some people will think, like, I'll give you a great example. Some people would say Starbucks is best in class. They're the best purveyor of coffee out there. Others would say Dutch Bros. So it is a bit subjective, I would say. But yeah, I certainly try to. Dean says, any thoughts on Haverty? HVT. Let's take a look at it real quick. It's been a long time since I've looked into this company. From what I remember, I do recall them having pretty decent financials, but I could be completely mistaken about that. Looks like they've seen a pretty big drop in the last year, but with that, the valuation's looking pretty good. 7.5% free cash flow yield. And look at this dividend yield too, 9.25%. Holy cow. I don't know, Dean. This isn't great. Looks like they had a nice COVID boost, but it's coming back down to reality, it looks like. So yeah, I wouldn't. This would not be a company. This is not a company I would be interested in personally. So pretty easy to tell, and that's what I like about Snap stock. It's just so easy to glance at this and use this as like a litmus test for further exploration. And pretty soon, guys, we're actually working on this right now. We're going to add financial statements, full financial statements to this too. So pretty soon, probably in the next month or couple of months, we'll have another little icon right here where you can click and it'll take you to the financial statements, but we're still working on that. Next up, we just rolled out functionality for REITs. Next up is working on like an annual and quarterly toggle. So pretty soon in the next few weeks, you'll be able to, I don't know exactly where it will go yet. Maybe we'll put it up somewhere up here in this header menu, but there will be a button where you can toggle between annual and quarterly, and it'll switch the views here on the charts. So that'll be next, and then we'll do financial statements there. But coming along, my friends, coming along. So let's see. Just keep going. Oh, Black Friday deal for excuse me, Black Friday deal for Snap stock. No, but right now it is 25% off. I mean, you can get the founding members discount, which is 25% off. So if you go to here, let's just do it. So let's go to Retire with Ryan. Just go to my website here. There's so many places to find it. You can just go to join right here in the top right. You can click members here in the top left. You can see this button right here. Click learn more. It'll take you to the page. And you can click any of these buttons, really. Any of these become a member buttons, or you can just scroll all the way down to the bottom where it says become a member right here. It'll give you a discount code for 25% off. And so that brings the membership down to like $147.50 or something like that, which I crunched the numbers. That's only like 40 cents a day. So you get access to all my stock research, book notes, Berkshire Hathaway shareholder letter notes, Snap Stock, a templated copy of the Investor's Almanac, tons of good stuff. So yeah, I'd love to have you guys aboard. This is a really good question. And I talked about this in my video Wednesday with Ari, or Thursday, yesterday with Ari. And I also talked about this in my video that went out Wednesday, because I'd gotten a question from someone who asked, it was a great question. One of you guys actually asked this. I don't remember which one of you guys. I apologize, but one of you guys asked me this, because I think it was in a live stream. Asked if I ever feel like I'm missing out on gains because I'm not investing in stocks like SoFi or Palantir. And I'll try not to turn this into a tangent. But the short answer is no, I don't feel like I'm missing out on those type of stocks. And I do feel that at this point, I don't think it was always this way. Probably not always this way, because it doesn't start this way. But I do think with those type of stocks, which are clearly very trendy right now, everyone now is talking about them. Everyone now is talking about those two stocks in particular. They are the it stocks of the day. They're the hot commodities right now. And when it gets to that point, and I could be wrong about this, let me know if you guys have a different opinion on this in the chat. But I think when it gets to that point where it's like everyone and their mother is talking about those stocks, then the price and the momentum that the price is seeing, the positive momentum that the price is seeing, becomes more so driven by hype and just people not wanting to miss out on the gains. It's FOMO. And so they pile into that stock to capitalize on that positive momentum. And I think that that's kind of what we're seeing right now with those two companies. It might not have started out that way. Like, it starts out driven by the financials and the story and the business fundamentals. But at a certain point, when when they start getting a lot of attention, it transitions into being driven more by hype. And I do think that's what we're seeing right now. And so going back to the question I received, do you feel like you're missing out? It's like, yeah, I certainly would like to have those gains, but not if it means, just kind of hopping on the bandwagon to something that that's clearly being driven by something other than the company's actual operational performance. That's not something I necessarily want to partake in. You can make money that way for sure, but timing is clearly like a very important component to that. And I'd just rather not deal with that. There's other things I'd prefer to invest in. So hopefully that answers the question. Really, really good question. But yeah, let me know what you guys think. Do you guys, I don't know, do you guys feel the same way? Do you feel differently? Let me know. Oh, Pat, thank you. Snapstock is great. Gonna have to put that on the website. Thanks, Pat. Let's see. You think we're seeing that with, yeah, we totally could be seeing that with Bitcoin too. Probably more so with something like Bitcoin. It's more likely to happen for sure with something like Bitcoin, because what else drives Bitcoin besides, and this is not like a criticism, maybe, I don't know. I don't mean it as a criticism, at least. It's one of the reasons that I don't invest in it, but I'm not necessarily criticizing it, because once again, like, people have made crazy money just holding on to Bitcoin. But yeah, I think even more so Bitcoin is driven by hype and momentum, right? I mean, as soon as it starts shooting up, it's the talk of the town, and people hear that and buy into it, and that drives the price up even more. And we've seen that a couple times where that's just kind of the cycle. Yeah, and I think, Eddie, this is probably a good way to look at it. There's no problem speculating on some up and coming stocks, but just keep it to what you can afford to lose. Yeah, I'd say so, because there's certainly more risk involved for sure. And there are some people like who have, when it comes to Palantir and SoFi, to their credit, there are some people who have been talking about these stocks for probably at least a couple of years now, talking about those companies for a couple of years now. And so they were in probably before it was driven by the hype and momentum. But yeah, I just think it's kind of gotten away from that now. Yeah, I agree with both of these comments right here. Chevy, you only make the money if you sell the Bitcoin. Same with Palantir and SoFi. Joey, I agree with this too. It's like buying a baseball card. Only way to get your money back is if someone else pays more than you did. Yeah, I mean, you can't buy groceries with a baseball card. You'll have to convert that to cash and, no longer own that asset. And that, guys, and I've talked about this so many times, but that's like one of the things that really keeps me investing in only dividend paying stocks is the idea that there's more than one way to benefit from the investment beyond just the share price. If a company doesn't pay a dividend, or if the security or the asset doesn't pay a dividend, then the only way to benefit from that investment is by letting it go. And I don't know. I've seen comments. Some of you guys comment in a way that how I've seen some of you guys describe it is you don't want to sell the goose that lays the golden egg. You want to keep getting those golden eggs. So yeah, I don't want to sell the goose. I like getting those eggs. And so I think that's a really good way to put it. And that's maybe, I don't know I'm really trying to be open-minded and see both sides of this. Because I don't want to be too dogmatic about anything. It doesn't resonate with me to let go of your stocks if you don't have to. That's why I like dividend investing. I like having that other option, that other way to generate a return on that investment. But still, the 4% rule, selling your assets in retirement works fine for people too. Like get ready to drink, guys. There's more than one way to skin the cat. Definitely more than one way to do this whole investing thing, but this is just the way that I prefer to do it. And it's worked pretty well for me so far. And, I like to think, hopefully I'm getting better at this stuff over time. We'll see. Oh, Be Still, I'm glad you brought this up. I love the Dividend Mailbox. Greg Detweiler, he's one of my favorites. I actually listened to his most recent episode today when I was on my run. But yeah, as soon as they put out a podcast, it's like an immediate download. So, and I wish they would publish more, but it's just once a month. So what's up, Matt? Good to see you, man. Drinking a peanut butter stout. Nice. That sounds delicious. That's great. I love stouts. I'm a big stout guy. Gosh, that sounds good. Yeah, I mean, to your point, going back to, buying, I guess, investments like the Palantirs and the SoFis, sure, you certainly risk missing out on good opportunities. But I think for every Amazon, there's probably 100 other duds that people think are going to be like an Amazon, but they turn out not to be. We only hear about the Amazons. So let me see where my wife's at, guys. Because we might wrap this up here pretty soon. Let me see. Bear with me. Okay, she'll be home in a couple minutes. Yeah, Salvatore, that's a really good question. So we'll go through a couple more of these guys and we'll call it a night. Any thoughts on buying any of the Mag 7s now that some pay dividends? Yeah, I mean, like Google and Meta paying a dividend certainly would put them like in fair game now. But at the same time, like those are two of the largest holdings in the S&P 500, and I'm already contributing to that every single week. So at least for now, I don't feel much of a need to invest in those companies because I'm already doing it every week, and I'm fine with just having that exposure through the fund. So that's kind of where I'm at with it. And yeah, I might change my mind on that over time, but yeah, I'm okay with just the S&P exposure for now. This is a good question. What type of account do you invest in most? I invest pretty evenly into my Roth IRA and my brokerage account. So actually, it's a little bit more in my Roth IRA, but these days it's split almost evenly. Yeah, exactly. Loft says, "Go get healthy, bro. The dividends will continue in the background. You got to be around to spend them." Exactly. That's such a great point. And I don't want to do this, guys, but I'm going to tie fitness and investing together because I truly believe the two go hand in hand. There's so many like similarities between the two, just in terms of the principle of delaying gratification. It's super present um, in both of those. But yeah, another dimension to that is you have to be around to spend your dividends. So you got to be healthy, you got to take care of yourself, and the more that you do, hopefully, the longer that you'll be around. And so the longer you can keep compounding your portfolio and stay on top of that. Dominique, hi there. Good to see you. I hope you have a great weekend as well. Yeah, guys, we'll wrap it up soon. I mean, some of you guys are just jumping in, so and she'll be home in just a couple of minutes, so we still not a huge rush, but I'll slowly start phasing this out. But Giovanni says, "Have you ever looked into Fundrise?" I have, kind of. Like, I know what it is. I'm not really interested in doing Fundrise though. I'd rather just buy more REITs. So that's kind of where I'm at with it. Does Snapstock not support ETFs? Not yet. We will roll out functionality for ETFs in the same way that we just rolled out REIT specific metrics. We will do the same for ETFs, and that should be pretty easy. I mean, there's really not many, like, as far as the visuals and the charts go. There's really not much you can do. I mean, the key pieces of information for ETFs would be share price, valuation. You wouldn't really have this. Dividends, you would obviously have. You'd want the expense ratio, the holdings, I suppose. Yeah, if we can get the top 10 holdings, or a list of the holdings, but that might be tough. We're kind of at the mercy of whatever the data provider is. And if you guys want to look it up, our data provider is this company right here, Financial Modeling Prep. So you can see all the different, I don't know if you guys can see that. I have the comments still up there. So yeah, right here, Financial Modeling Prep. So if you guys check that out and look more into it, that's where all of our data comes from. And yeah, as far as ETFs go, we'll, to the extent that we can, let's actually see. So Financial Modeling Prep. Let's see what they've got while we're here. API documentation, ETF holdings. Okay. So, okay, we can get the holdings. That's good. Yeah, we should, yeah. ETF holder, no, ETF information, ticker symbol, name, expense ratio, and assets under management. Okay, that could be good, especially to see. So that's one chart that we could do, assets under management over time, to see how that's trending. I think that would be good. Yeah, we could do some diversification stuff, I suppose. List of the dates now. Here, let's go back here. ETF holdings. A list of the institutional investors. So I personally don't really care about that. I don't know if you guys do or not, but ETF stock exposure. Yeah, there we go. That's what we're looking for. So the endpoint returns asset exposure from all. No, that's not helpful either. I don't really care to see what ETFs own Apple or whatever it is, So I think the biggest things would be like expense ratio, assets under management, sector weighting. I think that would be good. I think that would be really good, actually. And it doesn't look like through this there is a way to. This could be good too, just to know when they update their holdings. I don't think there's a way to list like the actual top 10 holdings. I don't know. I need to spend a bit more time with it, but that's what it looks like so far. But yeah, Alan, we'll roll that out here sometime in the near future. Snapstock's one of those things. It's going to be a constant work in progress for sure. It's been fun. I feel like it's only been launched now live for a month and a half. And I feel like it's already come such a long way. Um, and I'm really excited to keep developing it in the coming years. That's what it's going to take. And the cool thing is too about the investment club is a lot of the features and functionality that we're adding is coming from suggestions from the community. So that's one of the cool things about being a member of the club and getting access to Snapstock is that you have a direct hand in deciding which features get added and giving us that feedback and submitting those feature requests. It's super helpful. So it's kind of a team effort. I like to think of Snapstock, and I want to be as like public and transparent about it as I can because I think it's cool. I like showing you guys this stuff. Um, but my goal with it is to make it kind of like a for us by us platform. This is something that first and foremost wanted to make something that I would use. It had everything that I could possibly want, and so far I think it's hitting the mark. And like I said, it will continue to grow and evolve over time. But that's what I mean when it's kind of a for us, by us platform. But it's because it's not just me too. It's all the users. So okay. Uh-oh, she's home, guys. She is home. Um, let's see. Hmm. Okay, guys. I think last question. Then we'll wrap it up. There will be an app at some point, but I'll say it's not a huge priority. Not a huge priority right now. I feel like we still have so much to do in terms of adding features and functionality and making sure that that's dialed in. Um, and I don't want it to be a thing too, to where, how do I say this? I feel like there's only so many useful features that one could add. And I see other platforms like I see like there's just I'll say it like this. There's a lot on Seeking Alpha that I personally would never use. And so like I said, I feel like there's only so much useful information, so many useful features that one could add. And until we get to that point where we feel like we have done that and met that, I don't know that we'll work on the app. I think that would come secondary to building out the need to have bells and whistles. But once that bridge has been crossed, then yeah, I could definitely see us doing that. Yes, stock comparison charts are another thing that we're working on too. That's like a big thing. Like after financial statements, that will be one thing we'll work on for sure. Fast Eddie. Yeah, it'll happen, man. Fortunately, I'm 31 right now. I'll be 32 in July. Um, I'm hanging in there pretty good. I'm doing okay. I've always, I mean, it seems like it's coming back here, but I've kind of always had this, like even in my early 20s. So I really haven't seen much diminishment there in the hairline, and hopefully, knock on wood, I don't see that for some time, but it could happen. My grandpa, I had never seen a picture of him with hair. Like the only time I'd seen a picture of him with hair was like when he was like a childhood picture or something. But outside of that, in his adult life, I've never seen a picture of my grandpa with hair. So, it could happen. But I'll rock it. If I end up going bald, I will rock it. I'll tell you what. Yes, Pat. Yes, absolutely. Well, estimated probably so. Probably so. Definitely functionality to input your own portfolio. Like there will be some sort of some sort of like portfolio tracking component to it, I'm sure. I don't know if it will be super in depth like a snowball analytics. That's not really like the direction I necessarily want to go with it. But I think some light portfolio implementation will be there. Certainly the ability to add custom watch lists, that's also on the radar. So yeah, there will be stuff like that. I guess what I was trying to say earlier is I don't want the platform to be too much. I don't want it to necessarily, I want it to be good at what it does, and I don't want it to be, how do I say, what's the phrase or the word I'm looking for? I don't feel like it needs to be able to do everything. I don't feel like it needs to be a portfolio tracker and a stock analysis tool and a future value calculator and like an ETF overlap tool. I don't feel like it needs to be all these different things. I want it to be I want it to be more specialized. So ultimately, would this be able to replace your Excel tracker? Perhaps. Perhaps so. I think if we go look at that, which by the way, guys, you can download this and start using this for free. There's a link to it in the description. I don't, some of this stuff, I don't know. Perhaps this shouldn't be too hard to do. The thing that would be tough is getting it to automatically log all of your incoming dividend payments. I know that's for the portfolio trackers, like the specific ones like GetQuinn and Snowball Analytics and the dividend tracker. They have issues with that too with certain platforms like M1 Finance, Fidelity as well. I know that there's a lot of issues getting those automatic payments to track properly. So that's something that I may not necessarily want to deal with. I don't know yet. But I bet we could do a page like if there was I bet we could do a page that's kind of something similar to this, where it just has this type of stuff. But then again, like, is that going to be good enough? I don't know for users. Like, would that scratch that itch for them? And I just don't know if that would be the case. And if not, then we're getting into the territory where, okay, it's got to be a full on portfolio tracker. And like I said, I'm just not sure if that's a road that I want to go down with it. I just don't know yet. These are really, honestly, these are really good questions, and I'm glad you're asking them and getting me to think about them and talk about them. And I want to, it's great too to get your guys' feedback too as members or potential members, users of the platform. It's helpful to hash this out with you guys. So thank you. And I'm an open book with it too. Like I said, I'll be as open and transparent about all the happenings and stuff, the good things, the bad things, what we need to improve, what we're doing right. That's important to me. So I think being honest about that stuff, that's the only way you can improve it, really. So yeah, guys, but I think this is a good this is a good place to wrap it up. The boss is home. I can hear her coming up the stairs. And just as Zal is tuning in, man, just as he's getting here. But Zal, good to see you, man. But yeah, we're going to wrap it up, guys. But I want to thank you guys for hanging out with me. Good stream tonight, almost an hour and a half. So we got a good one in here. So quick question before I go. There's times, guys. Oh, okay. Goodness gracious. Just get pulled back in. Just get pulled back in. That's how it goes. Great question, though. Yes. And we already have a killer name for it. Okay. So do you see yourself creating a proprietary rating system for dividend stocks? Heck yes. Take a guess, guys, here in the chat. We have a killer name for it. It's the perfect name. And this is something we'll be working on sometime soon. What do you guys think? If you had to guess, what would be a fitting name for that in Snapstock? What do you think? I think you guys, you're going to get it. But let me see if I want to see if you guys can guess it. And I have one question to go before I go for good. For you guys, I have a question for you. And then in the meantime, while you guys are guessing that name, I'll answer Blaze's question. I'm not doing any of the programming. It's something that I'd like to start learning how to do, though, because I think it would be helpful for this. But I'm working with a programmer, a developer. He's super talented. It's just him and myself. And so far, it's been a really good team. It's been really good working together. But yeah, that's really not my forte. Patrick, you're close. Zal, you're close too. Combine those two. Combine your guys' two answers there. And you got it. Peanuts pick. Yeah, that's funny. I'll show you guys too. One thing that I'd like to do. This is just a random idea that I had. I'd like to build out this page right here a bit more. This is the main search page. I want to build it out so there's like suggestions right below it, like the most popular stocks, stocks in my portfolio, dividend kings, ones with the highest score, which the name, there we go. John here says he got it right. Snap score. We're going to call it the snap score. So ones with the highest snap score, So I'd like to start suggesting some stocks to look up here. So like I said, there's just so many things, guys. There's so many different fun things to add to this. Like I said, it's going to be just a work in progress for years to come. But I'm excited about it because there's just so much to do. So this platform, it will. There's going to be a lot to improve on it, which is great. It's great already, but there's so much more we can do, and that's exciting. But yeah, we're going to call it the snap score. Snap crackle stock. I love that. I'm going to save that. That could be used for something. I don't know what, but that could be used for something. Snap crackle stock. Oops. That's funny. So anyway, I had a question for you guys before I go. There's times where I'm just around, I've got some free time, and I randomly think, I kind of feel like just hopping on live. I don't know what I'd talk about, but I feel like just kind of popping on and just hanging out. Would you guys tune in to just random live streams, not pre-announced? I mean, I know you tuning in depends on what you're doing, but what could one call that? Because I don't want to call it just random live stream. Yeah. Okay. Yeah. Like I said, there's times where I'm like, I know it's only like 1:34 on a Tuesday, but yeah, it's kind of fun just to hop on and hang out. Cool. Yeah. I would template it out, the packaging, the title and thumbnail, just like I do the Dividend Happy Hour. So I don't know what to call it, but we'll see. I'll think about it. Random Ryan live. Ryan's random live. Yeah. Something like that. That's cool. That's got a nice little ring to it. I'll think of something like that, but I like that. I like that name. Ryan's random hour. Something like that. Well, no, because we already got the Dividend Happy Hour, so we can't do hour twice. But anyway, that's good to know. I think I'll probably you guys might randomly see me pop on a live, and no plan, no commitment to like it being regular or being a certain time. It'll start when it starts. It'll end when it ends. Stock talk. Yeah. Dividend brainstorm. Yeah. But anyway, guys, yeah, I'm officially going to hang up the hat for tonight. Yeah, I'll keep the green theme because that's on trend with just like the rest of my branding. But yeah, guys, we're gonna wrap it up here. But thank you guys so much for the great questions tonight, for all of the feedback. This has been good. I feel like we covered a lot of good ground. Yeah, dividend investors like consistency. I know. Um, but guys, I hope you all have a great weekend. Let's see what this next week brings in the market. Yeah, it'd be nice to do them early in the morning. Yeah, when the market opens. But yeah, guys, I hope you all have a great weekend. Sorry, losing my train of thought. I'm about to just like space off over here. But yeah, I hope you guys have a great weekend for the fourth time. Thank you again for hanging out with me. This was a lot of fun. And I'll see you guys in the next one. Be sure to tune into Sunday's video. I got a good one for you guys. I think you guys will. There's an important discussion in there, I think. So I hope you guys tune in there. But yeah, you guys have a great night, a great weekend, and I'll see you in the next one.